welcome to Cigars and Syndication. I'm Robbie. I'm here with Jay, where we're passionate about cigars and passionate about real estate. Today, we're going to be smoking a Don Pepin Garcia 20th anniversary cigar, and we're going to talk about Bitcoin a little bit.
Hey, welcome everybody. My name is Junaid Noor. Welcome to Cigars and Syndications. Um, we're passionate about cigars and we're passionate about real estate. But today we're gonna kind of go off of the real estate topic and talk about why Bitcoin has got this really strong run these past few weeks. It went from I think almost 19,000 to almost 40,000.
Yeah, that's correct.
Um, So we will talk about that. We'll review the cigar a little bit later. This is a Don Pepin. It's made by My Father. In case you guys like the My Father cigars, this is a 20th anniversary edition, and so far so good. Excellent smoke.
Yeah, got a really good mature tobacco flavor. It's really creamy, smooth. Maybe just a light hint of coffee and some nuts, but really really good cigar so far.
So we know that a pseudonym, somebody who used a pseudonym of Satoshi Nakamoto, wrote a paper in 2008 regarding peer-to-peer cryptocurrency, peer-to-peer networking on these currencies, but we don't really know who actually started the whole uh, the crypto craze. We know that the domain name was Bitcoin.org was registered October of 2008. So, crypto has been around for since 2008. So you're talking about 13 years or so. Just, going a little bit about the history of crypto. And then, of course, we've got, Bitcoin was the original big daddy. And then you've got Ethereum and you've got all these other little ones that kind of pop up. You get a few popping up every year, and then a few of them just kind of fall off every year as well. But yeah, Bitcoin's been around for a little bit of time, and we're going to talk a little bit about Bitcoin and figure out what affects Bitcoin, what's the volatility about, and is it a good investment? What do you think?
Yeah, I mean, it is. It's tricky to kind of nail it down. I think you've got several years ago it got hot and went on a good run, and I was invested in crypto. I was in Bitcoin and some other coins, and did fairly decent and had a good time. It was actually fun to track and follow, and but there's just still trying to nail down patterns and trying to understand you know what drives this. And I think it's I don't know that there is a pattern that exists. It just seems like as over time, uh, people get interested in it, it builds, it gets popular, gets really hot. People can make some money, and then it kind of fades. And just like in the recently, it's been very quiet. And I think it got as low as right under 14,000. And then ever since it hit that bottom, it started slowly creeping back up.
Yeah, well, originally the buzz around Bitcoin was that it was an asset that was going to replace gold as the asset that people turn to in case of inflation or in case of the what they call the safe haven asset. Um, but I never, and I'm kind of more old school than a lot of these younger people who have Bitcoin. I never saw it as a replacement of gold because if I have a gold coin, I can physically touch it, I can hold it, I can give it to you in exchange for something. Gold's been, a currency for thousands and thousands of years. Um, Bitcoin is not physical, and not everybody accepts it. Anybody in the world pretty much accepts gold, but not everybody accepts Bitcoin. And I think one of the things that affect the price of Bitcoin is supply and demand. And, just like everything else, supply and demand kind of dictates where it's going to go and who wants it and what the value is going to be.
Basically back when it started to cool off a little bit a year ago or 2 years ago, I think that the government regulations and federal regulations that surfaced and maybe they were pushed a little bit to try to regulate it. Kind of cooled it off a little bit, but it didn't seem like any of those had any teeth.
Yeah, that's kind of been one of the issues of the volatility. Um, is China coming out and completely banning Bitcoin or all cryptocurrency, not just Bitcoin. And interestingly enough, Binance, which is one of their big companies, uh, they do about $91 billion of Bitcoin exchange. They buy and sell a lot, or not Bitcoin itself, but they allow purchasing things with Bitcoin. So they do a lot of Bitcoin and they hold a lot of Bitcoin. But of course, China is kind of an interesting government system because maybe I think it was maybe about 10 years ago where they made an announcement that the Chinese government will recognize Bitcoin, and then they banned it. And somewhere in between, I'm sure someone bought a lot of Bitcoin first, um, made the announcement that you know they're going to accept it. Bitcoin rose up and then banned it. And I think at that time, Bitcoin had gone up to almost 20,000. And then as soon as China said, we're not going to take Bitcoin, it went back to around, I remember around $7,000.
Yeah, it dropped quite a bit, and I think, I wonder if a lot of these governments and countries thought they missed an opportunity and they wanted to step back and bring out their own digital currency.
Yeah, and the U.S. government is trying to do that. I believe the Chinese government is also trying to do that through Hong Kong. Um, the other thing that affects the value of Bitcoin is just plain investor sentiment, which is kind of what affects stocks too. But stocks have a value. They produce earnings, right? Stocks are based on corporations that produce earnings, and those earnings have a value. Bitcoin is not really based on anything, right? It's not, and the U.S. government doesn't even actually consider it a currency. In the beginning, they did. Now they only consider it as an asset. So when you buy and sell Bitcoin, depending on how long you held it, your tax is going to be whether it's ordinary income or capital gains. Since they don't treat it as a currency anymore, and it took a little while for them to come out with those tax rules. Because in the beginning, if it were just treated as a currency, then you would pay taxes based on the exchange of foreign currency, just like if you would buy British pounds or you would buy Chinese yuan for U.S. dollars and exchange those out.
Just like with any investment, what do you think the biggest risk are for crypto?
Well, I mean volatility, you know, um, and a lot of it has to do with media. A lot of it has to do with um, celebrities. So when Elon Musk comes out and says, we're going to start accepting Bitcoin to purchase Teslas, well, all of a sudden the price of Bitcoin is going to go up. And remember, Bitcoin is limited, right? We're only limited to 21 million. Is it? Is that correct? 21 million coins. Yeah, 21 million coins. So it's a limited supply. It's not like the U.S. dollar; they just can it can keep being printed. Um, we're limited to 21 million, and 90% have already been mined. So um, there's a limited supply, and when Elon comes out, or if somebody else comes out and says, "Hey, we're going to start accepting Bitcoin for purchases of this asset," obviously the price will go up because supply is limited and demand goes up.
Yeah, and I'm not an expert on the crypto mining, but I believe that it becomes incrementally more difficult to mine the next coin.
Yes, it's more expensive, right? Crypto mining requires a lot of power, a lot of electricity, so it becomes expensive to mine every incremental next coin. Yes.
For me, I guess one of the biggest risk items would be regulations. If the U.S. government or other big governments put their foot down and ban crypto, ban Bitcoin, I could see that would run off a lot of the investors.
I mean, China came out and announced that they're going to ban all cryptocurrency. The U.S. has not done that yet, um, and I don't think the U.S. will do that. But they have a lot of concerns, right? There's a lot of concerns around anonymity, uh, illegal use of cryptocurrency because you don't know who's buying, who's selling, and mainly because of the encryption, right? That encryption can't be broken. now, but that doesn't mean it won't be broken. But yes, and the anonymity concerns are there, and the regulation concerns come off of the anonymity concerns, right? Because the U.S. government wants to try to regulate, for example, drug trade.
Right. Well, and just like that's the payment of choice for hackers. And you so you have a certain criminal element with the crypto that makes it very difficult to track.
Yeah, and that's one of the reasons that the government has been struggling to try and regulate it. And I just finished a very interesting book called The Coming Wave, and he talks about that a little bit. He talks about the next technology wave that's coming. And one of the things he talks about is government regulation, and he says technology changes on a weekly basis, pretty much. But you can't get a law to pass within a week. It takes years for legislation to pass. And the government just needs to do a better job of keeping up with the technology because they're just not able to do that. They're using the old system of passing laws and they can't keep up with the technology that's moving as much, much quicker.
Well, it's just like AI. I mean, that's the elephant in the room right now. I mean, what's next? What's to come with AI, and how that's going to impact crypto?
Well, I'm glad you brought that up because one of the things that he mentions in this book, and it's an amazing book if you want to read it, it's called The Coming Wave by Mustafa Suleiman. He's an AI expert, and he talks about that. And I don't know, with the advent of quantum computers now, um, they're not there yet, but at the rate that they are moving, at the rate that they are getting faster and faster and faster, it won't be long before somebody can break through Bitcoin's encryption and start stealing coins from other people. Because one of the things of Bitcoin is that it's got such a large encryption that you can't break it through it with the computing power that we have now. But it's only a matter of time that quantum computers can.
Oh, I totally agree with that. The AI and quantum computers, I think they're definitely going to be a big risk for crypto.
I mean, quantum computers are very expensive right now, but hey, AWS, the Amazon Web Services, will allow you to rent a portion of their quantum computing, a fractional portion for $29 a month for development purposes. But it's going to be a matter of time before the computing power gets so fast, so powerful that it can break through a Bitcoin encryption.
Yeah, and I think that this recent boost, I think there's probably a little pent up demand. I think maybe people are a little worried about the economy and what's going on, what direction it's heading. I think that maybe they reach out to crypto and they feel safe and can see their money grow and it creates a little bit of a frenzy. And I think that, in this economic time right now, I think it's attractive to some investors.
Yeah, and the current rise in crypto, going up to almost $40,000, is because there's a buzz in the market in the U.S. stock market that the SEC will allow exchange traded funds for cryptocurrency. So basically, instead of buying the currency itself, you buy the exchange traded fund which holds the cryptocurrency. And because it would be an SEC regulated fund, you don't face the risk of people like Sam Friedman, who basically just defrauded his crypto investors, and there were a few other crypto exchanges which just went belly up with millions and millions and millions of dollars of cryptocurrency, which they just basically took, and you can't find them anymore. And because of the anonymity, you don't know, you know.
If those exchanges happen though, and they become SEC regulated, those funds become SEC regulated. I think that kind of levels it off. I think it stabilizes crypto so it's not so volatile.
Yeah, well, and then not just stabilizes, but I think the price will increase. So there are some indications that crypto or Bitcoin will go up to $60,000 a coin because again, now Since it's in an ETF, remember, institutional investors in the United States will purchase that ETF, and those ETFs will purchase the coins. And so, in order to balance portfolios, as institutional investors purchase stocks, real estate, gold, gold ETFs, they will purchase Bitcoin ETFs, but there's only so many Bitcoins to go around. So indications are that the prices will go up if the SEC approves this ETF.
Well, Jay, this Don Pepin Garcia is really good. I've had one before that kind of fell flat to my expectations because it's on the higher side of the price point. This 20th anniversary knocks it out of the park. Really good smoke.
Yeah, I am enjoying the smoke. It's very smooth. It's got that leather, a little bit of a nut flavor, creamy, but overall good smoke. Started out very spicy, but now it's kind of mellowed out.
No, really like it. It's definitely worth the money. If you see the 20th anniversary, I would definitely pick some up.
So, what are you thinking, Robbie? You gonna go buy some Bitcoin?
I'm hesitant. I'm mad at myself for not buying it when it was down at 14. Um, but I'm not sure yet. I'm gonna try to do a little investigating, kind of figure some things out, and see what I think is going to happen long term.
Well, if we hope you enjoyed this episode. We didn't talk about real estate much, but we did talk about Bitcoin. It just it was too hot of a topic. People were asking questions about what we thought about it, and so we needed to give some answers on that. But yeah, visit our website, www.albanyparkcapital.com. Click the resources tab. This episode, there's an article that we wrote on it, and it'll be on the website for you to look at. And we have a lot of other resources if you're interested in real estate in general. And enjoy the cigar.
Yeah, find you a good cigar, buy you a Bitcoin, and we'll see you next time.